Good evening. It's 6:56 mark. It's been open for almost an hour on a Super Bowl Sunday, 7th of February 2016. Let's get into it while everybody's watching TV. Investing and trading in the financial markets impose substantial risks to where one can lose all or more than their initial investment. The content provided by myself are for educational purposes only. All ideas and forecasts mentioned within are simply my opinions and not investment or trading advice. Trade at your own risk. Alright, we're just going to keep this on the spools, and we're going to go into support, resistance, and try to identify or at least gather as much information to make our best decisions going forward, because that's pretty much what we do. We take the information the market gives us and we try to interpret to the best of our abilities. Alright, this is a weekly chart, but real quick I'm just going to pan out just one time so you can see what this line is. This line is the double top breakout from 2007, 2008, and we broke out in 2013. And that led to this pretty much straight up run. Right, there was no pullback, meaning once we had broken out, we didn't have a full pullback, meaning at least 50% pullback to where new buyers can pretty much buy the dip. Right, it's been, if you ain't catch that breakout, the very quick pullback to the scene of the crime, and from there it's been a straight lift off. Alright, so that's what this line represents, 1586.75. So going forward, just want you to know that that's the anchor I'm drawing from as major support. Alright, so 1586.75, a little bit of the history. We had one trade, and I'll keep erasing these so you can just see them. We had one beautiful, you could have gotten a risk-free trade, meaning that you're giving, or a reduced risk trade, to where you would have risked very little bit to make substantial amount of gain. All right, so let's let me just pan out so you can see where we're at. All right, that was its first target. All right, so same anchor. I'm drawing always from these 1586.75s, and I'm probably not going to draw perfect, so please don't be to the next target. All right, let's see if this one I have to draw pretty much on the money, so it looks like it broke. If I can get it, it's like right there. Right, if you draw it perfectly, it should be in there like to the tick, and that gives you its next one. Again, same anchor. I'm going to erase this to the blown through target. Gave you your next one, a decent sized front run. That hammer had a low of 32 and the entry was 15, so that was pretty substantial. So again, from same anchor to new highs, 2014 half, gave you another pullback, and that was in October 2000. Okay, remember that. And then from there, the next one from 1586.75 to new highs, and mind you, the target from that October, I just want you to pay attention to this. All right, because going forward, I want to use a conservative support level, meaning that I don't want to risk being stopped out for or misidentifying trend or trend break. All right, so from the 1586.75 to that before the October dip, the 2014 halves, all right, it gave you a target of, I really believe that was 2111. So if I would draw it correct, it should be there. I'm not sure why it's not coming up. Okay, 2115s. All right, and you can see that we pretty much traded target in February, March. We dipped a little bit, made a new nominal high, traded it again. Excuse me. Again, you can actually look at this in a different circumstance. In April, traded target again, dipped down, came back up, traded target again, made a nominal new high, dipped down, traded target, which is pretty much going sideways. People are taking profit, right, on this massive from 1800s on up to 21. All right, so again, trading sideways. And then in July, remember, it was a massive box. We knew this was going to be profit taking into the next leg down. So you would usually position yourself into a short, or at least a minimum of a hedge. And this was very frustrating. So I just want you to remember exactly what happened here. And this didn't start until July. And this was we're not going to talk about resistance just yet, but I want you to see that pretty much we're still drawing to these 2014s. We never came down, okay, to support. Right now that we came down to support, we're drawing now to here. I just want to show you this. From these 1856, remember, until target, it was these 2011s, 2015s. All right, so yeah, I know it made a new high, and you can draw to here, all right, to these 2134s. But this is what I mean by being conservative. This gives you, if you draw conservatively to this anchor right here, it gives you 1788. So let's just mark the 1788. And if I would have drew this correctly, of which I didn't, the number would have been different. I believe it to be 1791. So let's remove this and do this one more time, see if I can get it correct. From these 1586, 75s, up to these 2000 whatevers. Right there. Yeah, 1780. Okay, I said 1791. All right, so this is a big difference. Let's redraw this now. Let's leave this up. Let's redraw this from the 1586 75s up to these 2134s. Give me a pinch down, because I don't. All right, there you go. Perfect. All right. See the difference? Right. Remember these 1795s I keep talking about. We go below 1795. That's when the bear market begins. All right. So just keep this in the back of your mind. The reason why I'm showing two is because we never came down. We traded it, but that was not the target. 2134 was not the target. So we never really came down and went through it to be drawing from that. The target was 2117. Yeah, we made another nominal, but if anything, we should have been drawing from these highs once we started pulling back. So yeah, we did make another new nominal high, but then just to be conservative again, not to misidentify a trend break, right? If we so happen to again come down one more time lower and try to poke through, right? Shorts are pressing right now, and this is a time to pretty much pay attention when we're down here. All right, so this is why, again, 1795, 1789. I'm going to construct a little box of support. All right, I'm just going to use a rectangle, and I'll use it in front of this price action. All right. We'll get, I guess we can leave it up there. It's not really hurting right now. And now let's talk about resistance. This I really want to get to the gist of being a box trade. This is very similar to what pretty much happened in here and in here. All right, it is prices pointing lower, but it remains to be seen that this has not been broken, and it's for a reason. All right. I would have been thinking sell if we would have poked through it. If you can print below these, again, this number is new for me, so, and it might be, if you draw it correctly in your chart, you may get a different number, so I encourage you to draw it so you have the correct number. But these 1789, 1788s, you get below that, and I'm not thinking buy side anymore. Right? Excuse me. So let's pan out. Okay. On the short side, you need to be paying attention, and this is a weekly, let's go to daily, to a few levels. The reason why it's a few levels is because you do not know where they're drawing from, and at any given time, if one breaks, another one can come into play. Right, so I had drawn, let's get rid of some of these. Actually, real quick, I'll save this because I need this. Some of this is just too I know it's too much to the eyes. All right. From these 2134s, it gives you your largest resistance. All right. What I mean by that, your biggest resistance, that price needs to get clear in order to confirm this is a bull market and the trend is still up. And until that happens, which remains to be seen, and it's just an opinion, it's this market is still in a sell, still showing immediate term downside. All right, so from these 2134s down to these 1804 quarters, it gives you a line in the stand at 2008. All right, you also have from the anchor of 2110 quarter and 2075. So from these 2110 quarters down to these 1804s gives you another line in the sand. All right, you recognize all these resistance levels piling up. Right now, again, from these 2075s to lows. All right, I'm gonna get rid of all three of these ones, and I'll redraw them later. Bear with me. You see this other anchor? Can you see it? No, it's really tight, but these 1980 quarters, these were the lows of the January 4th candle, where pretty much this is the level, if you was thinking to the sell side, that started working. The same thing that happened in this July, to where finally we had gotten some downside resistance. Well, this was the anchor we was using to figure out if we was gonna keep puking. All right, and when we had broke above there, we knew that it was a stop. All right, so this had confirmed that for right now, that this again, the support is still valid. All right, we broke a short and we did not break through support. All right, so again, I just want to compare this July to what's happening in December, January. All right, this low, what happened in 1980 down to lows. All right, do you remember this trade? All right, it was above 1913s. That told you to stop to the sell side. That's something we was gonna get a larger pop. All right, so that happened. You have to look what happened. We popped above, we broke the short, and where do we trade again? Support. All right, so it's right now, it's still a two-way trade. I don't want to try to say I'm biased. I'm willing to change at a moment's notice, but again, this chart is trying to tell you something. However, once we did break above these 1913s, look where we ran into. This is why I want to stop drawing a resistance level. From the 2075s to those, beautiful reaction. All right, don't pay attention to the target. The target's lower, but the thing is that we have yet to see we trade below these 1790s. So yes, I do see the target, I do see the reaction, but then again, for some reason, the support still holds. All right, so again, if you're piling up these resistance levels, yes, you can make a case for a ton of overhead resistance. Again, redrawing all of them from the 2075s down, 2110s down, and now the 2134s down. All right, now remember how we drew this box here, like trying to be conservative. So we know the max that this short, these sellers should keep price under these 2008s. Price should not get back above 2008. Should not print 2008. Sellers should do their damn best to keep it below. So again, let's just draw a box. A big box trade. This I'm trying to tell you, we can go well within the realms of this box and the well within the realms of this box, and we can possibly do it all year long. But if I had to give you a time frame, and you know I do not prognosticate on time frames. That's, you know, it's one of the worst things for somebody to think they have a crystal ball on time. All right. Based on the candles, on the monthly, on the weekly candles, I would say this would probably be an inside month. And we just do a little sidestep, and then the market will probably figure it out. But again, I can be wrong, and I don't care to be right about that. Just no, you're gonna have a lot of what happened in July. Chopped up and down, a big box trade until it decides to make its move. And then when it decides to make its move, you already know what its anchors are. I mean, can you guess? Remember how we went from, we used these lows down? Excuse me, let me get my Fibonacci. We went from lows down, controlling the sell. And actually in the smaller time frame, we actually used this candle, this small little doji right here. And geez, can't do that. We actually used a small doji right up here on August 18th. Those lows. But then once it got below this low, we started drawing from here. And that actually worked out. So again, it's frustrating once you start doing this straight, and how you know that's going to happen is that you have no continuation. Let's just pan out to the smaller time frames just a little bit. And let's go to daily first. All right. Once we broke above 13s, again that first sell broke. We broke right on this big blue candle, big green candle, excuse me. All right, we started looking for buy opportunities. All right, and right now that's holding. So if I can erase this so you can see it, you already know that's there. It's represented by the big box. All right, I'll leave those boxes in front of the price action. But from the 1804 lows to the 1940 highs, we're trading this support. So as nasty as this price action looked last week, we're on support. So that first line of support, and I'm not holding it to support, meaning that I'm not believing it because you can look at it like this. We can break this and still be on this support. So it's just, do you trust that enough to put your stop underneath? I'm not trying to say trade without stops. I'm just saying use your better intuition. All right. You're on a small band of risk, and you think it's not going to blow that just to get lower prices within this support. I don't know what to tell you. It's a rough trade, both if you're not buying on lows, and if you're buying mid-range. The same thing for the sell. If you're not selling resistance levels and you're selling mid-range, both sides you're getting killed. Both sides, on the sell and on the long. This is what this is meant to do. So I don't know, probably your crystal ball is better than mine, but I don't know where we're going. I do know once we start getting above or below, I'll have a better idea, and just like anybody else would. But again, I drew these big boxes just to show you that this is what I mean about the frustration. That's, you know, if I already had it this whole week, then I can foretell what's going to happen throughout the rest of the month. All right, it's going to be crazy. I mean, You gotta see what's gonna happen going forward. All right. Small term. Alright, you've seen that resistance. This is what I mean by secondary support. Never, the second trade never working. This was, Wednesday's highs, Wednesday's lows, Thursday's highs, and then we wind up breaking them Friday. So these were the 93 buys, and it never worked. And this is why we was targeting 35, and that never manifested. So that's gone. Poof. Alright, so I said same setup. It was the Wednesday's lows to highs, and it was Thursday's highs as well. Globex highs. Bounced once, bounced twice, and not even bounced twice, just failed. Nobody home. But then what's right below? Next support. So it sucks because it sort of takes your will away. You're going, you buy it once, alright? Take some off, fine dandy. You're looking for the next one. If the next one gets rammed through, I'm pretty sure this was the next one from before, and that failed. So believe me, on the long and the short side, it's rough. Everybody's getting smoked. Nobody has continuation. It's a box trade. All right, until the market shows its hand, it's a box trade. All right, so. In my opinion, and this is just an opinion, there's a rotation going on, and we're on support. We are on support. And not this one, the one that's lower. So going forward, we'll see. The market's good. It's going to show its hand. When your guesses might be better than mine. Somebody said earnings seasons. Somebody said after the Fed before. Right now it's just straight sideways. Alright, so it's just, I would say location on everything. It's a trader's paradise, and it's a good thing. It's a good thing. Everybody, I remember before when there was no volatility. Alright, now that we got some, it's careful what you wish for. Alright, and that's pretty much it. There's a support and resistance just going forward, just show you where it was at. And again, 2008s. So this box represents on the upside. Get above. I don't think you should be a seller. And below these 1790s. Sell everything. Not to scare anybody, but this is the charts. Right? I wrote down here from SPX historical low 460. That implies a long way down. Right? Even if you was doing a next measured move, I mean from these lows, it's hopeful. It's hopeful. Right? Regardless, either way you cut it, 1,400 and using $4.60 is about 1,100. Right? It remains to be seen. It's until we get below 1790s, I'm not even talking about it. I'm not even thinking about it until we do. I'm taking it, me personally, I'm taking this as a correction. And it's a very, very good tree shaking. Very good. Because sometimes it has me guessing twice and thinking about the sell side. Right? The sell side is a great trade, but only at higher levels. Right? 1940, I would be... Let's make this at least a little clearer. All right, from these 1940s on down, you have another level setting up. So let's see what happens. It's first resistance. All right, just the same way this has a high-lows trade, the sell side does too. So from these 1940s down to Friday's lows, who was lower? Actually, this February 3rd was lower, 75 by half. All right, so. Again, from these 1940s down to lows, your first resistance, meaning that you're going to find sellers on these 1900s. So you first got to get above 1912 to even think about going higher. So you even have a tighter box right now. All right, but it's not a, let's just say it's not a real box. Not to say it's not a real box, but it's, if that holds, that's more of a continuation pattern. Meaning that if we cannot get above this, we'll likely go a lot lower. quicker than higher. Alright, so again, this would be the first level resistance, and again, this is the first level of support. Same way, from low to highs, and then you have another one from high to lows. Alright, I know I said that's it, but thinking about what happened Friday. I got quite some feedback from Friday's trade. Sometimes I guess I'm just lazy, and I'd rather just have resting orders, because usually that's the way sometimes fibs have worked out. You can just leave resting order. You can, if you're not confident the trade, you can pretty much iceberg it up. If you're very confident on the trade, you can pretty much pyramid down, and it usually works out. But right now lately I've been watching participation. I want to see volume before I put it, which if it's an RTH, I want to watch the tick. Alright, so anybody who caught that was a decent trade, using a tick to try to time the lows, and did pretty okay. I caught 71s, and that was just that was actually more of a support level, and then from there 71s and added on 67s. That was 2 points off the lows. I already ditched most of mine's close of day 74s. Alright, it was to pretty much pay for the stop. Going forward, I'll try to put a little video of how to get on a trade and how to make it risk less or risk free or reduced risk. And what I mean by that is just you size up your position by, you already know how much your max hold is, how much your margin, whatnot, your account size, and how much you're used to trading with, comfortable with trading with, goes with that too. And if you know that you're getting in on 71s, meaning that if you're depending on these 71s to trade, you get in 71s, or you have to risk all the way down to 55 halves. So you size it up appropriately to where you would, your ideal position size from entry, you count up position in half to where you would scale out to pay for your stop. Or if not, you would even give it another tick or two to even be break even or better. Alright, so it's like if you're used to trading 16s, you'll trade 16s, you'll buy 71s, you'll probably be trying to book 74, 75s higher and get out, and then only on a halfway back that holds and you have to witness it, you would buy higher, meaning that you'll buy it again, meaning you get in 16, scale out 8, buy it again, scale out 8. Right, so I'll put together something, because I know a lot of people are having problems where you wait for a target and it never plays out, and I understand that, especially when I'm used to buying higher. I'm never scared to buy high, I'm never scared to sell lower. If that's the trend, you gotta go with it. Alright, until things like this happen, until you buy your initial 71, right? You look for your first opportunity, right? If you're not already selling into resistance, you're drawing again, you're buying it again, and you know you're holding the bag because you're waiting for a certain number, and then bam, not only did you just lose a couple dollars. If you size it correctly, it depends. But not only that, but you also lost time, waiting for this trade to work, and it didn't. So it sucks. There's pros and cons to it, but it's a little bit more of the patience development that works. Right now, spoos, the first resistance that I have going, it was drawn from lows, right? The prior day's lows, 2 lows, and it gives you 81 line in the sand. And right now, we're trading it almost perfectly. So I'll be watching this throughout the night. I'll probably even move my stop up from lows to highs and just bail on the rest 70. Alright, so if I see it can't get above and it gets below 70, I'm gone. Alright, so it'll be pretty much not that trade, waste of time. It is Sunday going into Monday. Let's see what happens. First level resistance again, 81s. And from there will be from highs. believe I have from 1940s. Yep, excuse me. From these 1940s on down, would be your next level of resistance. These 1913s. So we got to get above 81s, got to get above 13s. Alright, so that, more of the same. Expect more of the same. And let these markets tell you when to get in. If you're not willing to bite the bullet and buy lower, alright, you have to look at it like this. We did hold this support, and this is the first, and it's still just trading sideways. Alright, it's holding so far. Trade them safe.